Do you ever wonder what happens after you tap your phone screen and order dinner from your favorite restaurant? It seems so simple, so effortless, but behind that single tap, a war is raging. It's a war of technology, strategy, and billions of dollars. A war where companies like Grubhub, Uber Eats, and DoorDash are battling to deliver your dinner and win your dollar. In this video, we're going to pull back the curtain and take a deep dive into this high-stakes fight. We'll explore the strategies these companies use to grab a bigger slice of the market, the financial challenges they face, and the emerging trends shaping this rapidly evolving industry. We're going to unmask the intriguing economics of the food delivery war. So, the next time you order your favorite meal, you'll have a taste of not just your food but also the fascinating business drama that helped it arrive at your doorstep. Stay tuned, because this journey will change the way you look at your dinner. With the advent of the digital age, the business landscape has been profoundly transformed, birthing new industries and disrupting traditional ones. Among these is the food delivery industry, which has seen remarkable growth in recent years. Central to this growth are companies like Grubhub, Uber Eats, and DoorDash, which have emerged as the vanguard of this revolution. Initially, the traditional model of food delivery was tied primarily to pizza places and some Chinese restaurants. But the rise of the internet, smartphones, and sophisticated logistics systems changed the game entirely. Suddenly, a world of dining options was available at the fingertips of any consumer with a smartphone, transforming the way people think about ordering food. Grubhub was one of the pioneers of this industry, launching its service in 2004. The company's business model was simple but transformative. By partnering with local restaurants, they could offer a wide variety of food options to consumers, all through a single, convenient online platform. Over time, the company expanded its footprint, acquiring numerous smaller delivery services to grow its market share. Uber Eats, a venture of the ride-hailing giant Uber, leveraged its existing logistics network to join the food delivery industry in 2014. Its globally recognized brand and immense resources allowed it to quickly establish a strong presence in the market. DoorDash entered the fray in 2013, aiming to provide not just food delivery, but also logistics support for businesses. It quickly distinguished itself with its innovative approach and focus on customer service, rapidly growing to become one of the industry leaders. These companies, and others like them, have changed the food delivery industry's landscape, making dining more convenient than ever before. However, they didn't just change the way we order food, they triggered an economic shift, creating thousands of jobs and new income opportunities. The capital these companies raised is a testament to the financial implications of the industry. With billions of dollars in funding, these businesses have not only established their own space in the market but have significantly influenced the economy, opening new investment avenues and altering the direction of venture capital flow. Yet, the path these companies have embarked on is not without its hurdles. As they compete for dominance in an increasingly crowded market, these food delivery platforms have to continuously refine their strategies to win the customer's dinner dollar. This fight unfolds on many fronts, from technological innovation and customer experience to financial tactics and regulatory affairs, making the food delivery war a complex and fascinating economic phenomenon. The basic operating principle of food delivery platforms is relatively straightforward. They act as intermediaries between customers and restaurants. However, the financial intricacies within this model are far more complex and multifaceted, with diverse revenue streams and significant operational costs. Revenue for these companies is primarily generated through commissions charged on each order. These commissions, usually a percentage of the order total, are levied on the restaurants that utilize the platform to reach customers. The exact rate can vary, often depending on factors such as market competition and the bargaining power of individual restaurants. Some platforms also charge a delivery fee to the customer, providing another income stream. Beyond this, many platforms have introduced subscription services. For a monthly or annual fee, subscribers can access benefits such as reduced delivery fees or even free delivery. This model not only generates consistent revenue but also encourages customer loyalty, a significant advantage in this competitive market. Despite these diverse revenue sources, profitability remains elusive for many companies in the industry. The high operational costs, particularly those related to delivery logistics and maintaining a technological infrastructure, can eat into profits significantly. Customer acquisition and retention, too, are expensive tasks. Companies often resort to offering discounts and promotional deals, hoping to attract new customers and maintain their existing user base. Moreover, in order to broaden their restaurant base, these platforms often subsidize part of the cost for restaurants to join their service. While this strategy can increase the variety of food options available on the platform and attract more customers, it also further adds to the operational expenses. Additionally, these companies face significant costs related to their delivery workforce. The gig economy model, where drivers are treated as independent contractors rather than employees, allows companies to avoid certain labor costs. However, this approach is increasingly coming under legal scrutiny, potentially posing a significant financial risk. It's worth noting that these financial dynamics can vary across different geographic markets. Factors such as labor costs, restaurant density, and customer preferences can all impact the financial performance of these platforms in different regions. In conclusion, while the food delivery industry offers significant revenue potential, it also presents considerable financial challenges. Despite the high costs and complex operational hurdles, the fight for your dinner dollar continues unabated, driven by the lure of a growing customer base and the transformative potential of this industry. In the highly competitive landscape of the food delivery industry, the battle for market share is intense and multifaceted. Each platform seeks to carve out its niche, attract a broad customer base, and capture the highest possible share of the dinner dollar. To achieve this, companies employ a variety of strategies, ranging from aggressive marketing and promotional campaigns to technological innovation and strategic mergers and acquisitions. Marketing and promotional campaigns play a crucial role in these companies' strategies. By offering significant discounts, referral bonuses, and special offers, these platforms aim to attract new users and encourage existing ones to place orders more frequently. While such tactics can help boost order volume and revenue, they also place a substantial burden on the company's financials, further complicating the path to profitability. Technological innovation also forms a key part of the competitive strategy. By investing in technology, companies aim to enhance user experience, streamline delivery operations, and differentiate themselves from competitors. For example, machine learning algorithms can be used to personalize app interfaces for individual users or predict demand trends, helping to optimize delivery routes and reduce wait times. Mergers and acquisitions represent another strategic tool. By acquiring or merging with other platforms, a company can quickly expand its market presence, gain access to a larger customer base, and, in some cases, reduce competition. The costs of M&A can be high, but the potential rewards in terms of increased market share and improved operational efficiency make them an attractive option for many players in the industry. Another strategy is expanding service offerings. As mentioned earlier, some platforms have diversified into grocery and convenience item delivery. Others have begun offering pickup options, allowing customers to place orders through the app and then collect the food themselves, bypassing delivery fees. However, the effectiveness of these competitive strategies varies considerably across different markets and companies. What works for one platform in one city might not work for another in a different location. Each company must carefully analyze its specific market conditions, regulatory environment, and financial situation to devise and implement the most effective strategies. In conclusion, the fight for market share in the food delivery industry is a complex and ongoing battle fought on multiple fronts. As these platforms vie for your dinner dollar, they continue to evolve their strategies, balancing the drive for growth with the need for financial sustainability. The outcome of this market share warfare will have significant implications not only for the companies involved but also for the broader economic landscape of the digital age. The rapid evolution of the food delivery industry has given rise to several intriguing trends while simultaneously posing a slew of challenges that companies must navigate to sustain their growth and strive for profitability. One of the most prominent trends is the rise of ghost kitchens or virtual kitchens. These facilities, stripped of customer-facing elements like dining areas or waitstaff, are designed solely for preparing food for delivery. For restaurants, ghost kitchens offer an economical way to expand their delivery capacity or experiment with new concepts without the financial risk associated with traditional brick-and-mortar locations. From the perspective of delivery platforms, partnering with or even directly operating ghost kitchens offers the potential to increase order volume, reduce delivery times, and expand into new geographic markets, all while keeping costs relatively low. Another emerging trend is diversification into grocery and convenience delivery. Platforms such as Uber Eats and DoorDash have started offering delivery services from grocery stores and convenience stores, aiming to leverage their existing logistics networks and customer base to tap into a new market. This diversification strategy could potentially open new revenue streams and reduce dependency on restaurant delivery. Yet, despite these promising trends, the industry is fraught with numerous challenges. Regulatory scrutiny, particularly regarding the classification of delivery workers, poses a significant risk. In many countries, legal debates are ongoing about whether these workers should be classified as independent contractors, as the companies prefer, or as employees, which would entitle them to benefits and protections but increase labor costs for the platforms. Another major challenge is customer loyalty, or rather, the lack thereof. Research has shown that customers tend to show little loyalty to a particular platform and often switch between them based on factors such as price, delivery time, and restaurant availability. This lack of loyalty makes it difficult for platforms to retain customers without resorting to continuous discounts and promotions, which can further squeeze their profit margins. Data security and privacy are also emerging as significant concerns in the industry. With platforms collecting vast amounts of personal and financial data from users, they are increasingly targeted by cyber attacks. The financial and reputational costs associated with data breaches pose a growing risk. In sum, the future of the food delivery industry is likely to be shaped by a mix of promising trends and considerable challenges. As platforms strive to expand their reach and secure a larger share of your dinner dollar, they must navigate a complex landscape of financial, regulatory, and market forces. The industry's evolution will undoubtedly provide a fascinating study in the dynamics of digital innovation, competition, and economic strategy. The food delivery war, with its ever-shifting landscape, epitomizes the dynamics of modern digital business. As Grubhub, Uber Eats, DoorDash, and others battle for supremacy in this booming industry, the stakes have never been higher. Every strategy executed, every trend harnessed, and every challenge overcome takes these companies one step closer or further from the coveted dinner dollar. Looking ahead, it's clear that the food delivery industry is here to stay. The convenience and variety it offers have permanently altered consumer habits and expectations. However, the precise contours of the industry's future remain uncertain and will be shaped by a variety of factors. One of the critical determinants of the industry's future will be its ability to achieve sustainable profitability. Companies will need to devise innovative strategies to manage operational costs while continuing to attract and retain customers. Potential paths towards profitability could include further technological innovation, diversification of revenue streams, and increased operational efficiency through methods such as ghost kitchens. Another crucial factor will be regulatory developments, particularly those related to worker classification and data privacy. Companies will need to engage proactively with policymakers and regulators to navigate these challenges, and they may need to adapt their business models in response to new laws and regulations. Meanwhile, competition within the industry is likely to remain fierce. We may witness further consolidation through mergers and acquisitions as companies strive to achieve economies of scale and increase their market share. However, there will also be opportunities for new entrants and innovative business models to disrupt the status quo. The evolution of consumer preferences and technology will also play a defining role. As consumers become increasingly conscious of issues like sustainability and health, companies that can cater to these preferences will likely gain an advantage. Advances in technology could also reshape the industry, whether through the increased use of AI and data analytics or the advent of delivery drones and autonomous vehicles. In conclusion, the food delivery war is a microcosm of the larger digital revolution transforming our world. The fight for your dinner dollar is a compelling narrative of competition, innovation, and economic strategy in the digital age. As we continue to witness the evolution of this industry, we can expect it to provide valuable insights into the broader dynamics of digital businesses and the future of our economy. We hope this deep dive into the food delivery war has given you a taste of the complex dynamics and intense competition behind every meal you order. The next time you tap to order, you'll see the battles being fought for your dinner dollar, the innovative strategies being deployed, and the enormous economic shift being driven by these digital platforms. If you found this journey intriguing, don't forget to hit the like button and subscribe to our channel. We regularly explore the fascinating world of business and economics, demystifying the forces shaping our digital age. And remember, by subscribing, you won't just join our community, you'll also be the first to know when we release new videos. So, stay tuned and keep learning about the incredible world that exists behind the things we often take for granted. Thanks for watching, and until next time, keep exploring the economic stories behind your everyday life.